it's the time has arrived where Greg should become the chief executive officer of the company at year end. I would still hang around and could conceivably be useful in a few cases, but the final word would be what Greg said in operations, in capital deployment, whatever it might be. I have no intention, zero, of selling one share of Berkshire Hathaway. It'll get given away gradually.
Warren Buffett shocked an arena full of shareholders on Saturday with the announcement that he will be stepping down from Berkshire. He's been CEO of the company for 60 years, and he will be passing the position on to Greg Abel. Now, Warren's doing this at the end of the year, so he still has a few months left as the CEO. Warren was born in 1930, so he was born into the Great Depression. And since then, he has seen every stock market crash, every crisis. He's been through it all, he's seen it all, and he's come out with a net worth of $168 billion. So he is a good reason to be optimistic about the future. Because every 5 years, every decade, there's some crisis, some crash, yet the economy, the stock market always ends up better.
The long-term trend is up.
Warren had some things to say about the current tariffs. This was his critique of it. He said, "We should be looking to trade with the rest of the world. We should do what we do best, and they should do what they do best." Tariffs add costs in the system, and it does slow down an economy. But Trump has other reasons outside of just the economy to be putting the tariffs on. So it's not a purely economic decision. Even with Warren's critiques, he was still optimistic. We're always in the process of change. I would not get discouraged. We're all pretty lucky. So once again, like, Warren has seen everything since 1930. He was born into the Great Depression, has seen everything since then, and he's still optimistic because he understands that we're always in a process of change, and the United States always ends up better than it was before. One other thing I'll talk about Berkshire is that their cash at the year end, they ended the year with $334 billion, and that cash pile is now up to $347 billion. So their cash pile, at least as of the first quarter, has grown. They've increased the amount of cash. And they were a net seller of stocks for the 10th straight quarter. So I didn't realize that they've been selling a net seller for that many quarters in a row. So it's interesting that they've been selling into this whole move that we've had recently. Also, this is a really fascinating statistic here. So this year so far, the S&P's been down 3%, while Berkshire Hathaway has been up 19%. So after everything we've had, the Berkshire has outperformed by about 22 percentage points. So, I mean, that's really impressive for a company to be able to do that after everything that we've had. And, you know, Berkshire does is they buy other companies. So they've been able to make the right buy decisions that allowed them to outperform during this time that we've been in. So Greg Abel will be taking over Berkshire Hathaway, at least if the wishes of Buffett are met. And so he's been working for 2 decades with Warren Buffett. And apparently going into this, no one knew that Warren was going to be stepping down. His family didn't know, Greg Abel didn't know, that the board didn't know. No one knew until he announced today. However, it has been known since 2021 that Abel would be the heir of Buffett. So the future cannot be the same without Warren Buffett and also without Charlie Munger anymore on the board. But I'm sure they took their time really making sure they got the right successor. So right? If it's someone that they're choosing, then I'm sure that person is going to be good for the company. So I also want to talk about where we're at in the market currently. And first, I want to talk about the VIX went above 35 on this bar here, this April 4th, very bearish day. The VIX went above 35, and I made a couple videos talking about how that was a place where the market starts to buy the dip when VIX goes above 35. And we showed historically the market is usually up for a couple weeks or more, give or take, after the VIX goes above 35. So it's a strong indicator that it's time to buy the dip. And I made another video where I did buy the dip, and I got like a daily scalp. I scalped on the daily chart for 250 points. So that was how I treated this sell-off. And so after this, the market's up about 500 points since the VIX went above 35. So, most of this has been tariffs, right? It's not anything else. Nothing about this is anything else. It's tariffs. The market does not like the tariffs. So the market went way down because of that. And now that we've had some relief on the tariffs, the market is up. So what do I see on a technical standpoint? Well, technically, I would consider us to be in a trading range. So I would think about the top of the trading range being somewhere around this measure move, this big bull bar. So what's the biggest bar on the chart? It's this big bull bar. It's a it's a 500-point bull bar. Now, if I draw a measure move off of that body of that bar, that puts us up here, right around 6,000 as well. So 6,000, and with this measure move target, that's going to be an important area. I would suspect that the market would get up to that. Once it does, I think we're going to be in a larger trading range for a while. So a few weeks, probably more like a few months. So even if the market gets up to 6,200 and the previous all-time high, we're probably not going too far beyond it, and we'll probably want to come back and retest some of these levels. So unless the tariff band-aid completely gets ripped off and it's like, completely free trade, and it's better than expected, unless something like that happens, I would still assume that we're going to be in a trading range here. So I think rallies would be, I think there'd be sellers into rallies up here. And also, if we go down, I think there's going to be buyers into sell-off. So if market manages to get back down to 5,000, I think there'd be more buyers below that. And something I want to bring up is, do you remember during this sell-off how bearish everyone was? Everyone on the TV, everything you heard was, this is the end of the world, and we're going to go down a lot further than this. And then the next day we have this big bullish day. Now suddenly those same people, they're saying, oh, we're going back to the all-time highs. This is the start of a new bull rally, and this is the start of, this was a great buy the dip opportunity. Yeah, but you weren't saying that yesterday when the market was at its very low. Yesterday you were saying the market had a lot more down. So it's always fascinating how quickly that sentiment changes. So on the next big sell-off we have, watch the TV, and right when the people on the TV are getting most animated about the sell-off, where they're saying, this is the start of a huge crash, when they're really getting excited about it, then that usually ends up being the best place to be buying. So I just wanted to bring that up. I see that every time. I knew it was going to happen this time as well. When you see the strong sell-off, the TV just, that's all they talk about, and how there's more down. And then the second there's any kind of buying, they completely switch and they say, we're heading to all new time highs. So where do I stand right now? I think trading range, but I would be a little bit more bullish. So I would be thinking of a trading range with a lean towards being bullish. And one reason I think that is because, one, we do have this measured move target above, and we've also double bottomed here at the 20 moving average. So we got above it, we tested it here, still above it, tested it here. So I would consider this a double bottom, kind of like from this low and this low. They're not at the same level, but effectively they're testing around the same area. So this is a double bottom here. we've had some good buying above the moving average. Now, with this 200 EMA, usually that acts as pretty good support and resistance. In this case, I don't think it's going to be as strong. I think if the market's going up, then I think it's going to go right through that. I don't think it'll act as much resistance, especially if the tariff news gets very positive. Then the 200 moving average here won't be very significant. I think the market would just go right through it. With us being in a training range, with us already testing it a few times, I don't think it's going to be too important of a level. Now, that might change if we do end up reacting at this level and then maybe like double topping at that level. Then my opinion would change. But just what I'm looking at now, I would think we're slightly bullish. I think there's going to be sellers higher up here, and I think if the market does move up through this, I think it will go through it. I don't think it's going to stop right at that 200 moving average. So I think we're in a trading range, and when you're in a trading range, the market goes through the moving average. Sometimes it will act as that support and resistance, but versus when you're in a trend, you'll see the market be bouncing at the moving average as it goes in one direction. But when you're in a trading range, that moving average just acts as like the middle price, and the market goes above it and below it. So that's kind of why I think we would go right through it in this case. Another chart I want to look at was oil. So these are the crude oil futures, and this is a daily chart. Each bar is 1 day. Now, if we look up here, this is January 20th, right up here. So this is when Trump actually took office. Oil was around 78, 77 during that time. Now oil is down to 58. So we're 20 points lower than when Trump took office. So one of his goals was to, pump more oil and lower the price of oil and gas. Well, he's lowered the price of oil, but have you guys noticed the gas prices? The gas prices really haven't gone down. The gas I'm paying, it's pretty much the same as it was a few months ago. So oil's gone down 20 points, but gas prices are unchanged. So I just thought I'd be pointing that out. Oil and gas are a fight against inflation because oil and gas are inputs to the cost input of really anything we buy, really any good, and a lot of services are in part based on what the price of gas is. Right? Anything that's getting shipped or moved, it's going to matter what that gas price is. So that's why Trump pushes so hard to drill for more oil, is because if there's more supply of oil, the price of oil and gas will go down, and then that will help reduce inflation. It'll help bring down prices. So, Trump and his team going into these tariffs know that tariffs will increase costs. So they know if they want to do this strategy of increasing tariffs, at least temporarily, to help offset that, they need oil to go down so that inflation is not going to increase too much because you have this other factor that's reducing the inflation. So him making sure him fighting for oil to go down is part of the strategy that is at least in part due to the tariffs, right? We need this oil to go down to help offset that inflation if we're going to have increased tariffs. In fact, Trump is so passionate about low oil prices that I'll show you what he did in the past. Okay, so this is now the crude oil weekly chart. So this goes back to 2020, 2019. And do you notice what this dip here did? Here is 0. So oil actually went oil actually went negative in 2020. And I have a video that talked about this incident. So I'll put that in the description. You can see here, at least on this contract, this oil contract, oil got down to -20. So right here at this point on April 17th, that's when oil got $-20. So people were actually being paid to take oil very briefly.
Things get extraordinarily attractive very occasionally.
Now, this happened during COVID, right? So once again, that's kind of an extreme shock to the market. But I just wanted to point out, like, a lot of people don't even know that that happened, that oil actually went negative. You could be paid to take oil. So that was a once in a lifetime event for something like that to happen. So how much of that is Trump's policies and how much of it is just the extreme shock of COVID? It was probably more the COVID, right? But I just, I just wanted to bring that up, that historically, under Trump, oil has gone negative before. I don't expect that to happen again, but I just bring that up to show Trump's passion about drilling for oil and lowering the price of oil and gas. So guys, thank you for watching. It really is the end of an era with Buffett stepping down, although we still do have a few months left with him. But I just wanted to make this video, talk about that, talk about where we are in the market, and I hope you enjoyed it. And I'll see you next time.